So this is the chart showing you the income tax slab and the concession based upon the category of your gross salary, showing you also the health and education shares. This chart has been printed by me. Okay, I have taken the reference of the chart from the income tax portal. Okay, the left column you can see the income tax slabs are given. So these are the salaries. You can see, you can just refer to this as the gross salary that you are getting every month. So up to 4 lakhs, 4 lakhs to 8 lakhs, 8 to 12, 12 to 16, then we have 16 to 20, then 20 to 24, and 24 and lakhs and above. So supposedly you are getting a salary of so and so. After adding up all salaries for the 12th month, you get a salary which is less than 4 lakhs. So for those persons, you are not so as per the new tax regime, you don't have to pay any taxes. Okay, as well as there is no health and education cess. Okay, while on the other hand, if your salary, the gross salary of the whole year, it amounts to in between 4 lakhs and 8 lakhs, so you are charged with a value of 5% of the total income exceeding 4 lakhs. Okay, now if supposedly you have a salary of 8 lakhs, okay, that means supposedly you have a salary of approximately 8 lakhs. Okay, let's take it to the x lakh. So what is this slab showing you? That is 5% of the total income exceeding 4 lakhs. That means up till 4 lakhs you don't have to pay anything as tax. So let's assume that you have a salary which compiled to 8 lakhs per annum. Okay, so now let's just subtract 8 lakhs to 4 lakhs from the 8 lakhs value. Okay, so you get a 4 lakh value. Okay, now the new tax regime says that 5% of the total income exceeding 4 lakhs. That means 4 lakh is the exceeding value. Okay, if I just multiply it by 0.05, that is nothing but 5%, it amounts to 20%. So 4 lakhs. So if you have a salary which is exceeding than the 4 lakhs, okay, the 5% of the total exceeding value is taken into account. Okay, so 20 lakhs. If supposedly you have a exceeding value of 4 lakhs, that is supposedly 8 lakhs, that means for the whole excess of 4 lakhs beyond the first slab, okay, so you have to pay 20,000. Okay, so this value is showing you 20,000 rupees. Okay, same for this slab, you have to pay 4% of the total taxable income as a health and education cess. Okay, now next here 8 lakhs to 12 lakhs, here also there is a margin of 4 lakhs. Okay, so from the other slab we came to know that 5% of the total income, it shows us a value of 20,000. Okay, so that you have to pay. Supposedly you are now a yearly income is approximately, or let's assume it to be 12 lakhs, exactly 12 lakhs. Okay, that means you not only have an excess of value from 4 lakhs, but also you have an excess of value for 8 lakhs. So for excess from 4 lakhs to 8 lakhs, we have to pay 20,000. Okay, so that person who is having a salary, annual salary of 12 lakhs, he not only have to pay this value that comes down here over here, but he also has to pay an excess, how much? 10% of the total income. Okay, now from 0 to 4 lakhs 20,000 comes into play, but from 8 lakhs to 12 lakhs, let's see, the 10% of 4 lakhs becomes what? So this is the 4 lakh multiplied by 0.1, so 40,000. Okay, so now what happens is that this value, okay, 10% of the total income exceeding 8 lakhs, that is supposedly his value is, all annual salary is 12 lakhs. So he not only has to pay 20,000, but he has to also pay 40,000. So total of 20,000 plus 40,000, that is 60,000 is the tax concession that he is getting. Okay. Similarly, in the next slab, 12 lakhs to 16 lakhs. This 60,000 is nothing but you are paying this 20,000 plus the 60,000 that comes down over here plus 15% of the total income. Okay. Now total income exceeding 12 lakhs. Now what is the value? 12 lakhs to 16 lakhs. That is again a 4 lakh slab. Okay. So now let's see if I multiply the 4 lakh value with the 15% value. Let me see. 0.15. It comes out to 60,000. Okay. That means you are not only paying this 20,000, then this 60,000, you are also paying 60,000. That means this is amounting to 60,000, then we have another 60,000. So now we are paying a value of 1,20,000 as, or not paying, but we are given a rebate of or concession of 1,20,000 if your annual salary is beyond 12 lakhs or but less than the 16 lakhs. And similarly this value goes down there and then you have to add this value. So this is how you calculate your total concession in the tax rates as per the new tax regime. Now this is printout of the new tax regime income tax computation statement for the financial year 2025-26. Okay, so this is for the assessment year of 26-27. So whenever you are doing in computation, you are doing for the assessment of the next year, but you are doing it presently. Okay, so that is the present. Supposedly this is 25-26. Okay, now this is the page which is showing you in the at the top corner of this page. You have to write the employer's name, his designation, okay, the PAN number, the address of the office so and so, and the TAN number of the office on which or from where the person is working. So full form of this TAN is tax deduction and collection account number. So if you are not sure about that value, so it's an 12 letter word having combination of alphanumeric words. Okay, so you inquire in the account office of your department and you recover this number. Okay, so this should be available with the disbursing officer who is assigned in your office for this taxation work. Okay, so there are plenty of rows showing you some details in the one column, and you have a blank area where you have to fill up the words. Okay, so if you are new to this might look very complicated, but I will show you the simple way how to fill up this income tax computation form. Okay, so first and foremost, before proceeding to this, okay, you should know what is a gross salary, what is an area salary, and what are the deductions based upon an exemption that you find from your tax slab. Okay, now from your office, if you, it will be very good if you can collect this kind of a statement salary of your annual salary. Okay, so now, so before proceeding further, you first of all try to collect this from your office, account office, the annual pay and allowances and deductions, the detail of your salary. Okay, and if it's not there, there should be some portal that is providing you the details of the salary. Okay, what is coming where and what. Okay, so this is an example of that. Okay, supposedly I am doing this tax computation for a person having this kind of a salary statements. Okay, now take for example with for filling up the tax computation, what are the basic things that you should know. Okay, this value, the gross salary value. So this is nothing but the whole value that you get from your employer. Okay, so this is the value you should note down. Okay, next you should be focused on the values, which is this I tax. This is nothing but the income tax that you're paying. Okay, so basically this is a person who has been getting a salary which is net salary which is less than 12 lakhs. Okay, or near about 12 lakhs. So that's why it is he's falling in the new tax regime, so he does not have to pay the taxes. On these two values you have to note down. Okay, now coming back. Okay, in this person, in this computation of this person, the gross salary received during the year. Okay, now since this is the tax salary for gross salary, so we have to see the gross salary that what he has been getting, that is 12,02328. So this value we have to put or write over here. Okay, that is 12,02328. Now this is the gross salary that this person has been getting, okay, for the whole year. Okay, gross salary starting from the March of the last year to the February of the new year, this year. Okay, okay, the DAs and the arrears also you have to note down. Okay, so this is the value that you get. Now the next figure or the next slide shows you the arrear salary of the previous year. Okay, so in this person has been getting an arrear on the year year 2025 in the May and the June, that is amounting to 1188. Okay, so this falls under the driving dearness allowance. So you have a value. So the thing is that this gross value has been calculated by adding the areas that have been received in the previous years. Okay, so these are the three values. If I am not adding these values, okay, I have to add the whole this gross values and I will end up with this value. So you have to write, instead of this value you have to write 119444. Then you have to add up these values. Okay, and you have to write the value here in this segment. Okay, in this segment area. Okay, so basically your my accountant has done the whole work for me. Okay, he has added this value with the areas that is being received. So this is the value, so I directly put this value over here. Okay, but when you are doing this calculation by yourself, you just make sure that you are adding the gross values and writing these gross values in the first segment, first line, and in the second line you add the area values, that is the extra pay that you are getting, okay, over the salaries because of some increments. Okay, so you have to write that area value. Okay, so if you are writing that, then you don't have, you are writing this together. So this value, if you are writing this, then you just omit this value and write it nil. Okay, the next part, the segment 2 is showing you total A plus B. Okay, that means you have to write that value only. Okay, 12,02328. Okay, they are telling you to add the gross plus the DA, sorry, area salary. Okay, you will end up with this value. Okay, so they are telling you to add this, that means this value with that of the area values. Okay, this is the extra say. So this is the line showing you that. Okay, next, deduction of allowances to the extent exempt under section 1014. Okay, which is nothing but tax rebate due to educational allowances. Okay, and leave 1026 section, which is due to the leave travel allowances under new tax regime. we don't have to pay this thing. Okay, so we don't write anything over here. So if you are applied for that, you can write, but since this employer has not applied, I will write it nil. Next line, deduction or due to the house rent allowance to the exempt under 1013A. So this is nothing but the house rent allowances. So the house rent allowances are already paid by the subject. Okay, so you have to write that allowance value. If it is there, it's okay. If it is not there, you don't write the value. Okay, so supposedly this person is not getting the value house rent allowance, you write it with 0. Okay, and if you are getting the values, as in this case, the house rent allowance, so under the new tax regime there is no deduction of the house rent allowance. The allowance that you are getting from the staying in the hostels or quarters has to be paid, so you are not given deduction. Okay, the next section is, that is 5. The 5 section is showing you 2 minus 3 minus 4. That means 2 is this value. You have to subtract the second from 3 if you have applied for any deduction of allowances. So this is the section. So this is 0, and 4 is deduction of the HRA. Okay, so both of these things are 0, so you have to write 0 over here. Now standard deduction of 75,000 under section 16(1)(a). Now 16(1)(a) it tells you about the flat deduction for all salaried employees and pensioners. Okay, so whether you are a private or a government employee, it doesn't matter. So this is the value that you have to pay. Okay, so earlier this value under the old regime was 50,000, so now you have to pay this value. Okay, now this is the value that you have to carry forward. So entertainment allowance, nowadays it is not required. Tax on employment under section 16(3) is not allowed, that is entertainment or professional tax. And total value of tax by a government employee that you get is 75,000. Okay, now add any other income report by the employee. If you have any other added sources, you have to write that value over here. Since this employee does not have, I will write 0 over here. Okay, now you get to know, after exempting the values, you will get to know the total gross total income. Okay, so 5 minus 7 plus 8. 5 is the value that you have written over here. Okay, gross total income 5 minus, okay, sorry, this is not 0, suppose, sorry, here it is written as 2 minus 3 minus 4. That means 2 is this 12 lakh value minus the allowances. So we have to write here 12,02328. Okay, this is the value of in the section 5. Now after standard deduction of 75,000, what is the value we have to write in the section in the 9 point. Okay, that is 5, this value minus 75,000. so you will end up with a value of, sorry, you will end up with a value of 1,127,328. Okay, that means you have subtracted 75,000 from 12 lakhs 2,328 rupees. Okay, so this is the gross total income after standard deduction of 75,000. Now moving on to the next deduction. So there in the 10th section we have deductions like 80D, 80DD. So 80D is showing you is it tells you about the tax deduction for health insurance premiums, preventing health checkups and medical expenses for individuals and Hindu undivided families. Okay, 80DD, it tells you about the deduction for expenses related to medical treatment, training, or rehabilitation of disabled or dependent persons. Okay, so a rebate of around 75,000, or precisely 75,000, if a person has a disability of 40 to 79%. Again, we have a rebate of around 1 lakh, okay, 75,000 rebate, and we have 1,25,000 tax deduction if you have a disability of more than 80%. Okay, and this 40 to 79% disability. Okay, so these are the, if supposedly those things are applied. Okay, or 80DDB, this tells you about your medical treatment for specific severe diseases for the employee or or his dependent, that is spouse, children. Okay, all those things. 80 G, for example, it tells you about it tells you about any charity, if you have donated to some specific charitable government recognized charity funds. Okay, so there, if you have done that, then you have to apply for that. And 80U, it tells you about another disability criteria, and when the disability is less than 40%, so you have to apply that. So these are the section 24 one. It tells you about the interest amount of the housing loan if you have applied for any house loan. So if you have done that, then you will get some tax rebate. Then 80TTA, interest earned on deposit in savings account. Okay, so maximum up to 10,000 you can get a rebate. Okay, so these are the values. So under the new tax regime, you there's no useful, not useful, so you are getting a values of nil, so nothing you can add. Then we have the next line showing you the deduction under chapter 5A. So these are the supposedly these are the provident funds that you apply, LIC, life insurance policy, like this. There are plenty of policies that you apply. Okay, employers contribution to NTP, NPS, and contribution. Supposedly this person is not applying for all any of these schemes, so you would get nil. So this particular person for which I am applying, you have to I'm just writing it nil because he or she have not applied it. Okay, now coming to this section, next important section is 15, net taxable income of the year. Okay, so it is actually nothing but this value, 11 lakhs. Okay, so you have to subtract 9 from 11 and 13 and 14. Okay, since this person has not did not apply, so you are getting the same value. You have to write the same value over here, that is 11, 27, 328. Now comes the tricky part. The next, now you have the net taxable income of the year. Okay, now tax on the total income. Now you have to remember the tax slab that I've discussed. Okay, now this is the tax slab. So this value, so you can see the person's net taxable income is 11 lakhs, above 11 lakhs but below 12 lakhs, so it falls under this slab. Okay, that is 8 lakhs to 12 lakhs. So under this tax slab, we have a concession tax rate of 20,000 plus 10% of the total income. So 20,000 you have to pay because your value of salary, this person's value of salary is more than 4 lakhs but less than 12 lakhs. How much more less? So you have to calculate the excess value. Okay, so what you do then you subtract this 11, So this person's salary falls in this slab. That means we have to calculate the excess value of salary which is exceeding 8 lakhs. Now this person's value of total taxable income is 11 lakhs, right? So we have to first of all write this 11 lakh value, 11,27,328. Now we have to calculate the excess value to 8 lakhs. Okay, that is minus 8 lakhs. Okay, so this is the net excess value to the 8 lakhs slab. Okay, that means we have to take a 10% of this value. Okay, so what we do, we multiply with 0.10. So you get a value of 32,732.8. Let's round it up to 32733. Okay, 32733. So this is the 10% of the total income accessing 8 lakhs. Okay, since his salary is 11 lakhs, but it is not crossing the 12 lakh margin, so that's why it is not falling in this slab. So we are concerned with this slab. Okay, so with this slab, what we have to do, we have to calculate this value. Okay, we have to calculate these two values. Okay, 20,000, which is coming from the previous slab, and now we are getting a 10% of the total excess, that is 32. Now let's add this value to 20,000. Now we are getting a value of 52,733. Now write this value over here. So tax on total income that we have calculated is, now it comes up to the value of 52,733. Okay, tax rebate up to 60,000 for next section is tax rebate up to 60,000 for net taxable income up to 12 lakhs under section 87A. This is actually a rebate of a maximum of 60,000 if a salary supposedly is so that you have an excess of this value for more than 60,000. So if you are getting a tax which is more than 60,000, then you might apply for this tax rebate under this slab. So since this person's value is less than 60,000, so we can't apply for here. Okay, so here we are not applying for anything. Okay, we will write just the same values. Okay, so tax rebate, so total tax what we get in this person's salary is 52. Tax rebate is, it will be the same value only. Okay, now in the next section it is tax payable on total income, that is 16 minus 17. So supposedly the person's value of tax was more than 60,000, so you had to write that value to minus the 60,000 value. Supposedly the person was taxable around 80,000, so you have to minus the 80,000 with 60,000, that is 20,000 you have to write. Since this person's value is the same only, so it falls under the tax rebate. Okay, so everything will be rebated under this new tax regime. So tax payable on total income is 16 minus 7, so you will get the value to be 0. The rest of the segments, all the values will be 0. There will be no marginal relief. There will be no tax payable after marginal relief. Okay, then health and education cess as 4%. Since you don't have an tax payable on total income, so you won't be giving any health and education cess, so you write over here 0. And under 89A, that is relief from tax for family pension or salary area, here also you apply it to be 0 or nil. Okay, so at the end you write this value only. The only thing which is important for you is tax payable or refundable is 23 Okay, so everything is gets to be 0. So 23 minus 24, 23 is this, minus 24, so you are getting a value of 0. So this person in this financial year won't be paying any taxes, because he has already paid the tax that was issued to him. Okay, so because his tax salary or total salary is less than 12 lakhs, okay, the net salary. And at the end you have to write the employee's name, the signature of the employee, and the disbursing and distributing officer of the accounts, his sign and seal, and that completes your total tax computation for the financial year. Okay, thank you.